Hello and welcome back from the break. Our next session is going to focus on a cohort of companies that are often overlooked and underserved by the financial sector. And I'm talking about small and medium-sized companies and micro companies. Um, Now, this sector has grown in recent years. A lot of people set up their own businesses during the pandemic, and they account for up to about half of global employment. Yet, as the cost of living crisis intensifies, it's going to be these businesses, especially the fledgling ones, who are going to be really finding it tough navigating their way through rising energy costs and everything, inflation, everything that goes with that. So today we are going to be focusing on what financial services can do to help out. Now, throughout the session, you'll be able to submit questions using the Q&A box on the right-hand side of your screen. And we'll also encourage you to share your thoughts and tweets and anything else on social media using the hashtag Banking Revolution. This afternoon, turning to my panel, we are joined by Rajesh Gupta, who is the Chief Financial Officer at Oak North Bank, which is a UK lender focused on small and medium-sized companies. We also have Richard Davis, who is Chief Executive of Elika Bank, another UK bank focused on mid-sized companies, and Liz Barkley, who is the UK's Small Business Commissioner. And last but not least, we have Hannah Bernard, who is Head of Business Banking at Barclays. Thank you very much, all of you, for joining me today. And I'd like to start off, I think, some helpful comments, maybe from Liz and the rest of you to join in afterwards, just to help us frame this discussion. It'd be good to get your thoughts. I know this is something you're quite interested in and have fairly forthright opinions on, Liz. To what extent is it unhelpful to lump, as the name of this session does, SMEs, small, medium-sized, micro-sized companies, all into the same bucket when talking about these issues? And does that, to a degree, to what degree should we think about their different needs?
Yes, I think we need to drop the SME tag. There are about 5.6, 5.7 million businesses in the UK. 99.2% of those have fewer than 49 employees. Now, if you think about that, you've got in that mix, you have got different sizes, different sectors, different geographies, different regions, different demographics. And you've got businesses at startup stage, scale up stage, thinking about growth, etc. And then you move on to, and some of those will become some of the 35,600 medium-sized businesses. But if we start by lumping them together, there's very little attempt made to work out exactly what the needs of each of those businesses are. Now, I know it's very difficult to take 5.6 million businesses, each a different story, each at a different stage in a different place, and cater to their individual needs. But you've got women-led businesses, you've got minority-led businesses, businesses run by people with neurodivergence, and all of those will look for support in different ways, in different places, and from different sources. And so I think it's really important that we're much more granular in our thinking about what those small businesses might need, because as you said, Owen, they employ about 50% of the workforce. And it's very, very important that that small business sector succeeds.
That's great. Well, Rajesh, firstly, maybe it'd be good to get your thoughts on those comments, but also looking a bit about Oak North and sort of the sector that you most focus on.
Yeah. See, I think I agree with Liz. I think the commonality between all these businesses are they're entrepreneur-run businesses, and they contribute a lot to the communities they operate in, and create a lot of employment in the communities they are in. Right. So that's a common bit that probably binds them all together. But other than the dimensions of size and who leads them, there's also the dimension of which industry do they operate in. Are they restaurants? Are they hospitality industries? A restaurant somewhere in Mayfair is very different from a restaurant somewhere in a little village somewhere. So there are lots of different aspects and dimensions to this issue. So when you're thinking about what they contribute, I have no problem in thinking about them as one. when you're thinking about what their needs are and how best they can be supported, then understanding the dimensions and understand the segments within which they operate is massively important. And when you ask me about Oak North focuses on a part of that market currently, which we call the missing middle. These are people and clients we find who find it very difficult to get finance, either in the quantum or the terms or the speed with which they require finance. And the primary reason for this is fundamentally traditional banks have operated either in totally automated processes or on the other extreme in totally manual underwriting processes that are very idiosyncratic to that particular client. And somewhere in the middle, there are a lot of clients of ours and in the market where people can't get finance, as I said, in the terms or the terms or the speed at which they should be getting it, and that's where Oak North operates in.
Okay, thank you, Richard. It'd be good to similar question really. How do you look at that cohort businesses, and where do you specialize in, and what sort of things should we be thinking about when thinking about the different companies within that?
Yeah, I completely agree with the point. This is not one homogenous market. I think we focus on established businesses. So these are typically 5, 20, 50, 80 employee type businesses. So some people might call those getting towards mid-sized business if you kind of look at the total volume, but actually you can see even with Oak North talking about the missing middle, there's difference between us because we and Oak North pretty much never compete with each other. So even within sort of a spectrum, you might start to establish as kind of small to mid-size. There's still a lot of diversity, geography, sector makes a massive difference. I mean, and if we had someone here from Tide or Starling, they would talk about the one-person business, the freelancer, of which there are millions, and there's just huge differences across these segments. And I think what's great is we are starting to see a lot more dedicated businesses, banks out there to serve those different segments, which is much needed because it's so hard to do it in a one-size-fits-all way. So I mean, for us, we do lending, and I'd agree with Rajesh that speed is critical. So we sort of pride ourselves in always turning around lending decisions within 3 days. But we also offer a full range of banking services. So we have a current account, which is fairly unique amongst challenger banks for this sort of more mid-sized business segment. So anyway, so we were trying to be a full-service bank for that sort of established business out there, catering for dimensions like geography and sector as well. It's definitely a market you need a lot of granularity in.
Great, and so we've heard it from a couple of the challenger banks. Hannah from Barclays. I mean, it's a different proposition, but clearly you all serve the entire business community of the UK. But in terms of the kind of at the smaller end, in terms of the business size, can you talk about what Barclays is doing there, and also how you view the various companies within that?
Yeah, absolutely. So business banking within Barclays operates at that lower end, as you say, up to companies of about turnover about 6.5 million. So we are, just over 1 million customers in our portfolio. And I would say actually all of the points that my learned colleagues have made around the different segments is absolutely true. And actually for large lenders, we do a lot of work around customer segmentation. So what is it that defines their needs in a different way? Where are they common and where are they different? And how do we therefore cater to those needs? And I think all the points you've made are entirely right. I think just as in terms of go back to the original question around this banner of SMEs and whether it's appropriate or not, the only thing I would say is it depends on the conversation, because I do think it's helpful when you're having a conversation when you're trying to point out that entirety versus the medium and large corporates. And things like, I know Liz is very close to our heart around payments and people's ability to get payments on time. To talk about the role of mid and large corporates versus SMEs and making sure they do their duty, I think is helpful to have a kind of broader banner. You don't have to get caught up in all the different segments within it to have a proper conversation about what it means for SMEs. But that said, I think, the point around, the roles that Oak North and Oli can make around different niches, absolutely right to tailor to the segment that we want to serve. I think the beauty of I'll plug Barclays for a minute is that you have the full spectrum. So we can take the startups, identify what they need, and then hope to pull them through to end up being one of the corporates of the future. And I think that's, we just have to all make sure that for any business, you're trying to meet the needs of your customers, aren't you? So understanding them and then tailoring your proposition to them is absolutely critical.
Yeah, great. Thanks very much. I frame this conversation in the context of the cost of living crisis. Clearly rising inflation, rising interest rates. To what extent is that going to have an impact on these companies' ability to access funding, and the other problems that will emerge that maybe the banks, the finance industry is going to have to help them out, especially in the next sort of 18 months or so when it's really going to bite. Richard, maybe if you can bring you on that point, how are you kind of gearing up for your customers, your potential customers, the kind of problems they're going to be facing in the sort of short to medium term?
Yeah, so I think, first of all, very much welcome the fact the government is going to do something to support businesses with regards to the energy costs, because that's clearly been the sort of very fast looming elephant in the room, where you're seeing the average business probably seeing about 5-fold, maybe 6-fold increase in their electricity and gas costs as of next month without that support. And I guess let's take a typical example. You've got a hotel with a gas-fired boiler and clearly uses quite a bit of electricity. That might have been 5%, maybe 7% of their cost base historically. If you multiply that number by 5, suddenly it's a huge increase in their cost base, and the average profit margin for a hotel is about 15%. So you're talking about going from a profit of 15% to probably a loss of 15%. So you're going to see just massive range of bankruptcies across a wide range of industries without that sort of intervention. So I think it's been great that the government has recognised that, and we're looking forward to seeing some more details. Clearly, we want to play our part in this. We're in no way looking to pull back on lending. We want to keep finding the companies that have the good prospects, the good growth, support that growth, as well as supporting customers that do get into any financial difficulty. But as I say, there's sort of this elephant in the room with what essentially is economic warfare going on between Russia and UK and Europe, which has created this just unprecedented dislocation in energy costs.
Right. Yeah, absolutely. Rajesh, any thoughts on that?
Yeah, I think there is definitely the energy cost crisis that Richard alluded to. But in addition to that, there is the supply chain disruption and fairly significant costs associated with raw materials and their availability that also these industries are facing into. And thirdly, we are operating in very, very tight labor markets. So you take the three of these together, effectively, this is going to affect from a small and medium enterprise, micro enterprise perspective, their ability to stay on for a longer period, and which in turn will impact their affordability and viability. And therefore, I think lending, if nothing is done, will be constrained to these sectors in the coming months. Now, of course, the government is taking a number of actions, and not all of it is entirely clear. Hopefully, during the rest of this week and in the coming weeks, it'll be much more clearer what kind of support packages are going into place. But the extent to which financial institutions are able to support these companies will depend upon what that support package in the end looks like and what it means to overall economic growth. Now, typically, in the past, what we have seen is traditional approach has been when things get really tight, banks would deselect themselves out of one sector or the other and say, you know what, that sector isn't real. I cannot lend to that sector. The one thing we can commit to from an open oath perspective is we would not take a sectoral approach. We will take a client by client, need by need approach, and we'll underwrite each case individually. And to the extent we think there is staying power in the client and with some support, we will continue to support them. We did that during COVID by supporting a number of companies in the hospitality sector and in the care sector. And we expect to be doing that in the coming 18 months or so when this crisis will be at its peak.
Okay, great. Just looking at some of the questions we've had through so far, and thanks for them. Please keep them coming. There is a lot of interest in what banks, and in particular some of the neobanks, will be doing. So hopefully we've answered some of those points. Hannah, it'd be good to come in with you. What are you seeing at Barclays? And also the question here in terms of how have interest rates charged on SMEs, how they'd be impacted by current economic situation compared to larger companies. So that's a question more on interest rates charged on SMEs. So if you have any thoughts on that.
Yeah, I mean, so undoubtedly, if you have a rising rate environment, the cost of funds will be higher, and that regardless of whether you're a small or a medium or a large company. So I think to the previous point from Rajesh and Richard, actually, the lending will still be there if they have strong business cases, and I think it's important to note that. Particularly the thing I think is not a supply issue, it's a demand issue at the moment, and it's for all the reasons you've talked about in terms of affordability, but also confidence. And I think that the challenge you've got is a lot of businesses aren't clear they're going to have the labour or the supply chain there in order to fund their expansion, and therefore there is going to be subdued demand for funding. So one, there will be a bit around, it will be more expensive to borrow regardless, because the rates are in the rate environment is on an upward trajectory, and so therefore the business has to be robust. They have to make sure that as a funder, as a borrower, you want to make sure you're going to get return on investment. But they also have to be confident. I think it's more than it's not a question of rates. I think it's a question of confidence that they're going to get payback on the investment they make.
Okay. Liz, is there anything you want to come in here on the cost of living crisis and inflation and rising interest rates that you're seeing?
Yeah, I think we're framing this wrongly, because it's the cost of doing business, not the cost of living, that's really impacting the businesses. And a lot of businesses are in the position where they need to borrow to survive. They need funding to survive, not just funding for growth at the moment. And I know that Richard mentioned the hotel owner, but just last week talking to a hotel owner who had previously been paying £42,000 a year for energy costs, and those are going up to £500,000 a year. Now, that just is not doable. And then you've got the position of the business case, as Hannah mentioned. If you've got a business case and you look like a viable business, then you may get the funding, but you're not going to look like a viable business if your energy costs are going up by more than 10 times. And so it's a catch-22 situation. And for a lot of small businesses, and we talked about the freelancers, the sole traders, the micros, and so on at that end, for a lot of those, we're beginning to hear about the difficulty of making choices between paying for your energy bills and taking home a salary. And if you can't take home a salary, you can't pay your household bills. And so you're really looking at a situation where the cost of doing business is one crisis and the cost of living is another crisis, but there's an awful lot of overlap and people affected by both. So it's really fundamentally, it's not just about confidence and demand, it's about survivability and whether or not people feel that they can actually make a case, especially when they have other debts to pay, like some of the COVID loans, etc., still waiting to be paid back. But this is filtering up the way to the medium-sized businesses too. And then we come into a situation where, when you're thinking of your source of income being the services or the goods that you sell, you're starting to wonder, am I going to get paid at all? And then we come into the payment situation where those payments are taking longer to come through, or you're being offered extended payment terms. And that's another knock to your cash flow. And it is about cash flow.
Yeah, absolutely. Liz, you've been doing this job for about 18 months or so in this position, and I think one of the main things you've been looking at is the issue of late payments. And clearly this is an issue for a lot of the smaller businesses, could only exacerbate in the months to come. Can you talk a little bit about what you've been doing in that area, how some providers in the industry are helping out here, and what more could be done if these problems persist?
Well, late payments, I do remember Wake Up to Money starting 35 years ago or something of that sort. And we were talking about late payments on that very first edition on Five Live. So, this is something that's been around for a long time. But the question is, what are we talking about? Are we actually talking about late payments, as in overdue invoices, or are we talking about contractual terms that mean it's a long time before you get paid? And we're talking about both. And I think what we saw during the pandemic was a lot of firms realized that they weren't going to have the goods on the shelves or the services to sell on to their own customers if they didn't pay more quickly. And so we saw firms coming in with payments in 14 days, even 7 days, where they had previously taken 30 or 45. But on the other hand, we saw other firms during the pandemic taking longer to pay. Now, we at the end of the pandemic, payments were on average around about 32 days. They're beginning to pull out again. We are seeing them taking a bit longer. And that's because firms are waiting themselves to get paid in a lot of cases. And of course, the knock on effect goes round and round there. And my message is always the freelancers, the sole traders, the micro businesses, this is the talent that's helping you, the bigger business, the bigger small or the medium sized business, to reach your business success. This is real talent there. And if they're not paid, they're not going to be there the next time you need them. It's costly to go out and look for new suppliers. And I'm looking for a bit more of that partnership working, really know your supplier, know the companies that you're working with, thinking about stewardship and how you work together to keep the supply chain, all the links in that supply chain going in times of crisis like this. And so we're saying to bigger businesses, this is a governance issue, this is an ethical issue, this is an ESG measurement, your payment performance. Really think about how you can improve your payment performance in order to keep your smaller suppliers alive. Otherwise, they just aren't going to be there when you need them.
I'd like to hear from all the banks here. What are you doing, or what are you seeing? What more can be done from the bank's perspective to help out with these issues? Hannah, maybe start off with you.
Yeah, Joe. I mean, we're a big supporter of the kind of payments campaign for small businesses, and I think things like highlighting the issue. I think the point that Liz makes around large corporates viewing as a social obligation is really, really important. I think we have to continue to bang that drum. I think there's an acknowledgement. We did a survey earlier in the year around consumers and how actually consumers, in a number of ESG elements, actually can start to vote with their feet. If we can if they will start to care about how often, if people are routinely paying their small suppliers late. So we had I think one of the surveys said 58% of consumers said they'd boycott a business if they knew they regularly paid their suppliers late. So there's going to be an increasing pressure, I think, on those large corporates to do a better job. And I think, for example, we've joined the Good Business Pays campaign, which I know Toy Corporate's kind of running. That starts to highlight, quite boldly, those corporates that he believes are not doing a good enough job. And I think that's the thing that we should all start to get behind and support, so that it starts to recognise Liz's point around that social kind of network and the kind of fabric that we have to support everything as part of that ecosystem. And if you allow the bottom to not get paid, you're fundamentally breaking something in society. So yeah, I mean, there's a lot we can do. I think it's about raising awareness, doing our own bit. We have to make sure that we pay our suppliers on time, so we do that, and we make sure that that's monitored as part of our membership of Good Business Pays.
Great, thank you. Rajesh, from Oak North's perspective?
Yeah, I think slightly different from our vantage. I think a lot of the smaller suppliers we work out tend to be more professionals like lawyers and surveyors and people like that. And we do have some pretty, standard ways of making sure we pay them on time. Nonetheless, things can always be improved, and we constantly work on making sure that we are able to ensure that the money reaches them at the right time. The biggest way we can make an impact, though, is our clients themselves. They work with a lot of small and micro companies themselves, the construction companies, the restaurants, the care homes, etc. So to have a slick process in place to make sure that we are ensuring the money gets to them as soon as they meet whatever conditions are required is of critical importance to us, and we try to make sure that we get the money to them within 24 to 48 hours of their requirements being very clear with us. And that is what we focus on in addition to just paying our suppliers on time.
Okay, thank you. Richard, any thoughts on payments?
Yeah, I mean, I'd probably broadly echo what Rajesh said in terms of our own practices. I think the interesting question for me is that actually, if you look at the amount of cash balances in the economy, it's actually at record highs pretty much. I think in the SME sector, to use the aggregate term, there's about £250 billion, and actually more of that is in the small and micro than in the medium size. And there's about another 300 billion of sterling deposits in the corporate sector. So that's more than double what it was 10 years ago. So in some ways, you've got this sort of the haves and the have-nots. You've got people of large cash balances in micro, in small, in medium, in corporate, and then those are struggling to get paid as well. So I just think this is something where it is a societal problem. People should not be hoarding cash and delaying payments. That's just not an ethical practice.
Okay. Richard and Rajesh, you both sort of spoke earlier about the areas that your banks focus on, the missing middle. I think, Rajesh, you said earlier. Is there an argument to say that some of those businesses, that the medium-sized businesses are less well served than probably at the smaller end, that, sole traders or people with just a handful of staff, there are more options out there, especially with some of the neobanks which specialize in this area, and it's the mid-sized banks or the big-sized companies that are really struggling with having their banking needs met. Rajesh?
Yeah, I think you're absolutely right. Lending to, for the moment, I'll use the word SME. Lending to the sector is not easy, right? Because if you think about traditional banking, on one hand, you had largely automated processes, which was scorecard based. You make an application, you get a computer says yes, computer says no kind of decision, and you get on with it. And on the other hand, you had corporate loan approaches, which was very, individual underwriting, look at the circumstances of each client, and then decide what you can do around that. The reality about the banks, about the clients in the missing middle, is that they don't fit either model properly because they're not homogeneous, as Richard said earlier on, and they have less scale, therefore prone to uncertainties. So you really need what I would call a hybrid underwriting and portfolio management model that's able to lend at scale and speed to these clients in the missing middle. Automated and formulaic enough to be able to drive speed, but customized enough to take care of their idiosyncrasies. And what we think we have been able to do at Oak North is to fine tune our processes using data and analytics to achieve exactly that. We have bespoke scenario development processes and forward-looking stress tests that help us understand exactly what amount of credit and in what terms we can provide to a particular client. We've lent since 2016 almost £8 billion to this sector, and with reasonably good credit performance and reasonably good profitability. So we think it can be done. It's a question of doing more of it and making sure that these clients get the benefit of speed, good terms, and also the kind of credit that they genuinely deserve that is not easy for a computer to come to a view on.
Yeah, okay, that's interesting. Richard, your thoughts?
So, I mean, I think there are still opportunities out there for sure to help micros. I think the current account market's improved dramatically in terms of competition, but I guess current accounts is not all of financial services, so I'm not sure micro businesses have a full range of options for services beyond current account right now. But I mean, within the space that we operate, so that business that's got established, it's got maybe 10, 40 employees. I think the issue here is one of there's a lot of complexity that you do need to treat them as individual businesses and understand the sector and the region and etc. But the size of the loan is not that big. Our average loan is about £400,000. And so you've got this sort of how do you solve that complexity so you can do something that understands the client properly, when you're not getting a very large loan that's therefore not generating as much income that you can put lots of people on it. So we think there's a lot more to be done there to really improve that market. The other thing we feel for these established businesses is there is no real alternative to the high street banks for current accounts. So while the micro business segment's got Tide, Starling, Monzo, none of those players are really doing a say 40-person business current account. So there's very little range of choice of current accounts for that sort of size business, and as a result, the fees and charges are quite high. So yeah, we sort of point to those sort of areas as we want to work on in our sort of target market. But as I say, I don't want to say any of the segments solved. I think I mean, people would often include not-for-profits in this segment, and I know right now there's lots of issues around people wanting. My dad had, in fact, he was trying to get a new account for his the local group he chairs, where their current provider's exiting the account, and he's found it really hard to get a new account where you can have the capability that two people need to authorize payment, so someone can't run off the money, and almost no one's offering that service anymore. So I think wherever you look, whenever there's sort of a complex need that's not just a nice homogenous millions of customer thing, there's always underservice.
Yeah, absolutely. Well, I mean, Hannah, I mean, we've been talking about the size of companies, but if we're looking at SMEs as a broad group, or certainly smaller businesses, what about issues for things like women or ethnic minority-owned companies? I mean, they're clearly an underserved, certainly historically portion. What can be done to address these cohorts, these sorts of businesses?
Yeah, and actually, I suppose it's not that it's finance per se that's underserving them, but actually they're just underrepresented generally in small and medium-sized business ownership. So I think there was a gender index report that said women and female founders are 17% of total population of SME owners, and I don't actually even have the stats for black founder business example, because the data on I think minority founders is pretty poor. So I think there's a lack of representation generally in entrepreneurs for certain groups, gender and ethnic minorities. And then I think when you then play that into finance, there are some differences. So I think broadly, for example, we find that women have the same level of access to sort of the lending that we do, but they typically ask for less, and when they come through, they'll get approved. But there's a kind of confidence issue, I think, around access to certain groups, and then them kind of playing into that finance sector. So I'd definitely say there's more we should do as society to improve representation amongst entrepreneurs, and that will start at schools. It goes through to building confidence, allowing access to networks, and then banks, I think, have a really big role to play to make sure that they're then giving as much support as possible to make sure that they can use the advantage of a large bank's network, for example, to plug in that they may have through whatever advantage they have from being a white male or what have you, that we need to make sure we remove any of those disadvantages and make sure we're giving as much support as possible to give everybody equity in access to finance.
Okay, thank you so much. We've had some more questions, so I'd like to see if we can get to some more. This one's quite an interesting one. What's the biggest, most impactful thing the banking industry can do to better help support SMEs? And maybe I can broaden it out to maybe not just the industry, but also government policy. What areas of government policy or a change in the banking industry would you like to really improve access for this group? And Liz, maybe starting with you.
Well, I won't comment on government policy, but what I would say is that quite often we miss the opportunity when people go to their banks or to their lenders for help to think about whether or not it's a broader support that they need. Not everybody needs funding, and quite often small businesses think funding is going to be the answer to their problem when it isn't, but actually other means of support might be that help. So it might be mentoring, for instance. How do people find the support they want? Quite often from their peers. and they prefer it to be delivered that way. So, what kind of systems and support can we put in place that would give that advice and help? And I think that there's a question about inclusivity here. In what Hannah said, quite rightly, is yes, there is underrepresentation of all sorts of leaders of businesses, but there's also underrepresentation in the lenders as well. And quite often, I want to be asking somebody like me for the answer to what I perceive to be my problems. And so I think we need to do more to get better inclusivity across the lenders, across the financial services sector, as well as in the entrepreneurship. And I would like to see something that said, look, if you want help and you don't know what the question is to ask, start here. And we will allow you to get to the source of your help, whether or not that is funding. But quite often it's not funding, quite often it's advice, support, and information of other sorts.
Okay, thank you. Richard, what would you like to see changed?
So I think there's a really urgent need to focus on how we drive energy efficiency. I mean, clearly we've got various long-term net zero commitments, but if this current energy crisis is not going to force us to quicken the pace of change, I don't know what will, because let's go back to that hotel. Can we fund a heat pump to replace the gas boiler? Or let's talk about a convenience store that's got lots of old, open, refrigerated units that are bleeding electricity all day long. Can we get those replaced to much more energy efficient models? And how can we, perhaps between government and the private sector banks, work on that as an absolute matter of urgency for the next 12 months? Because, I mean, without that, what's the plan? What's the exit route from this current energy crisis?
Yeah. Okay. Thank you, Rajesh. Good to hear your thoughts. In terms of what would you like to see from the industry or from government, and specifically around helping small businesses.
Yeah, I think if I think about it in the narrow confines of funding for just a minute, I think obviously there are things that can be done to both support the clients, the SME clients on one hand, and also the lenders on the other. And if I'm talking about the support to the SMEs, the immediate support that is required is to deal with the current crisis that we have. I think the support package has to be very clear and very easily understood by everyone, so that they can get much more certainty back into their business. But there is also a somewhat related issue, which is sometimes we see the support packages are available, but it doesn't reach the intended targets in time, or at definitely the pace that it is required to reach there. And I think this is a much more systemic issue. But these days, every 2 years we seem to be coming up with some sort of crisis or the other, right? First Brexit, and then COVID, and now we're talking about the cost of living crisis. So we have to fundamentally figure out what is the framework that is required to make sure support systems can get to the SME sector as fast as it possibly can to consumers, for example, right? That is one piece. And as far as the banks like ourselves and Richard's bank is concerned, I think the question really is for us as new entrants in the market who are trying to specialize in segments and things like that. There are a couple of different things which we feel are becoming more headwinds to ourselves. One is the amount of capital that we need to hold against this. There is some support factor that is available, but it's not sufficient in our view to make sure that we can lend more into this sector. And then the second thing is also for smaller banks, the corporate tax surcharge is quite material and quite significant. And in time we would hope to see that come down. So by combining and addressing the needs of both the sector, but also the financial institutions that are operating in the sector, I think policy can definitely support us do more to the clients in this area.
Great, thanks very much. And then finally, Hannah, what would you like to see changes in industry, government policy to really help enable funding or financial access for these groups?
Well, there's a few. There's a massive question there, and I think from an industry perspective, I think there's plenty of competition, and I think actually you're seeing increasing collaboration between fintechs and large banks. So I actually think there's not a lack of supply of innovation and collaboration across the industry. So I think it is well served. I think the issue, to Rajesh's first point, was it's hard to navigate actually. So there is and I think Liz, you talked about this is not knowing where to go for help and advice. So I think it's not about the actual provision of goods and services. It's help and advice there's a gap in the market today, and I think we need to do a better job as an industry of signposting and educating, and particularly as I talked about it in the early years for entrepreneurs. We've got various modules in schools that we could be doing more of to help train entrepreneurs. We have a Barclays Life Skills, quick plug, but you do need to start early and start to train out the skills that people need, and then where they need to go. And then there's things like incubators, accelerators. There's whole networks that we could do at a more local level to get small businesses getting the advice and support they need right early on, and then connecting out into those networks that we know we all have amongst us within the industry. And then when I look at the government, to come to that point, Rich is absolutely right. We need to hear what happens this week in terms of support for SMEs, but very important that it's not, and I don't think it will be, it's the cap, but not debt. That there's a lot of debt in the market at the moment. It's about actual support to help them through this current crisis. And then I think to go to the longer term piece around inclusivity and access, we do need help in terms of, for example, collecting data on ethnic minority founders through Companies House. We need a central point to do that. It shouldn't be a lender thing to collect that data, I don't think. I think it's better served from the centre. And then we all need to look at those stats, and we need to make sure we're doing a good enough job for everybody, and make sure it's genuinely an open and fair system for everybody, and they all know where to go.
That's great. Well, we're just coming to the end of our allocated spot here, so it's really flown by. I think we've covered a lot of ground, and you've all been great. It's been bringing lots of great examples to the table, lots of insights, and really interesting perspectives on what can be changed and what hopefully will in the next few years to really help these companies through what is set to get a much more intense crisis ahead. So thanks very much for sharing your ideas and your thoughts today, and also to the audience for your considered questions. I think I only got through about a quarter of the ones we had, so thanks very much for those. Just to remind you that the session will be available on demand for the next 30 days on the Banking Revolution website, so you can watch again if you so wish. But all that remains for me to say is thank you very much to my panelists, and thank you very much to the audience for watching, and enjoy the rest of the day. Thank you very much. Goodbye.
Thank you.
Thank you.